Jessica Lee Wen, Director of Marketing at Upside Avenue. I'm here today with Chief Investment Officer Chi Hathiramani for Upside Insights, where we check in with investment experts and get their opinions on how we can live our upside. So Chi, today we've got you here today. We want to talk a little bit about Upside Avenue and how COVID-19 has affected Upside Avenue's business model. Can you tell us a little bit about that?
Absolutely. Sure. And thanks for having me on. So our strategy remains the same. We're fundamentally a REIT that is a long-term investor. We create steady returns, right? Steady dividends and long-term wealth through appreciation as well. So that fundamental component doesn't change. What we are doing today is leveraging the business cycle. So in this recessionary environment, due to COVID at the time of this video, and sort of where the markets are, where there's uncertainty, we are focusing on low basis investments, which means we're buying low, right? So the old adage, buy low, sell high. Now is a perfect time to focus and capitalize on buying low. So we're doing that and also focusing on safety and of our underwriting. So we call it margin of safety in our underwriting. So with those couple of factors, really, that general focus remains the same. And then that's how we're moving it here. However, our tactics specifically have changed in this recessionary environment. Today, value add is a bit more difficult because of the fact that rents are lower, wage income's dropped. We're just not sure we can get those rent premiums today, that we typically underwrite in more aggressive scenarios or in more aggressive expanding economies. So today, we're slowing down from that and are more focused on sort of well-located, good quality assets like A-, B+, B assets in bulletproof locations, where we can actually derive long-term appreciation while generating a healthy dividend today. Now, the last strategy in addition to that is sort of the distress. Now, we haven't seen it yet, but our anticipation is that in the next 6 months or so, we'll start to see some distress in the markets. And with that, hopefully we'll find some great deals at great basis.
Oh, great. Good to know that, we've got a plan in place and it's going to help balance out everyone's portfolio. So I guess as an Upside Avenue investors, they're probably wondering, how is their investment protected then?
Sure. Yeah. So from a protection standpoint, there's really three key things we look at from a portfolio allocation standpoint and from an investment standpoint. First is diversification. Are we geographically diversified? Are we demographically diversified across broad spectrums of the society? Are we diversified from an income level perspective? Like A+, A-, B+, B. We generally play in sort of the widest part of the space, which is the B to sort of A- space assets. It's the widest part of the economy that does very well, generally across cycles. So we're looking at diversification across multiple spectrums. Now, we are a multifamily, senior housing, student housing focused group, which have historically been some of the best performing asset classes, and we'll continue to expand on that. But generally speaking, we are looking for diversification. That's the first one. The second is volatility. Really, the assets we invest in are fixed real estate assets that don't change in valuations aggressively on a day-to-day basis. As we're seeing today at the time of this video, COVID has taken trillions of dollars out of the market and then put trillions of dollars back, and the fluctuation seems to be it seems to be occurring very rapidly, right? Now, with the real estate assets we're investing in, these are cash flow generating assets that will actually drive long-term value and create long-term value without those kinds of fluctuations. So that's the other part. The last one is correlation. It's really the essence of what correlation seems to indicate is that how closely tied is this asset class to other asset classes. And what we found is, in general, real estate tends to be far less correlated to stocks and bonds than certain other asset classes. So what this does is it provides you that risk mitigation while also allowing you to garner the returns. So those are really the three reasons why I think our investment, an investor in the REIT's capital is protected.
Okay. So should people be investing in real estate right now?
Absolutely. And as with any REIT investment or long-term investment, we really need investors to see the long-term horizon. There's actually one of the major capital shops did a fascinating study looking back to the 1930s. So this is almost a 90-year study. And what they found is long-term investors who just invested and held in the market, whether it was up, down, throughout all these decades, fared 2.5 times better than investors who tried to time the market. And the assumption was the investor could actually time the market perfectly and get in and out within 10 months of any recession and get out 10 months after a peak, or get back in 10 months after a peak. So looking at it that way, even if you were perfect at market timing, a long-term investor who just sat behind and watched their investment grow could do better, 2.5 times better. It's really fascinating. Now there's other components to that. Obviously, right now, as we are in a recessionary environment, this is when valuations are at their lowest or heading into their lowest period. That is what we call margin of safety. That is where the price you're paying compared to the fundamentals of the property are at their closest. Sometimes the price is even lower than the fundamentals of the property. And that's a margin of safety. It means over the long run, as the market expands and recovers and moves back into the environment we saw in 2018, 2019, you're poised for outperformance of returns. We at Upside Avenue are aggressively seeking those kinds of investments during this time.
Wow, this is great. So if you had a magic crystal ball, what are your thoughts on post-COVID-19? How is that going to play out?
Sure. Okay, first of all, that is a million, billion, trillion-dollar question, right? And the question is, should we speculate? And as prudent investors, as primarily value-focused investors, we don't generally speculate in that manner. So how it will play out is yet to be seen. However, some things we do know, some facts. Multifamily housing tends to be historically more resilient than other asset classes. And then obviously the real estate space in general tends to be more resilient than, call it, common equity during a downturn, et cetera. So we've really got some good tailwinds going for us being in multifamily real estate per se. Other things like recessions tend to cause a drain in savings and wages. So what happens is as we come out of a recession, the vast majority of the population actually doesn't have the money to go back and start buying homes and proceeding with their white picket fence dreams. So what that does is it actually creates some tailwinds for multifamily for quite some period of time, where we start to see rent increases and occupancy tighten. And that's a fantastic thing to be where we are. We're multifamily investors primarily. That's a fantastic outcome. One of the last couple of things I wanted to bring up on this post-COVID thoughts and sort of how it will play out is that there are really major events that affect us. Things like interest rates, access to credit. This year, particularly the 2020 elections, will have a potentially significant impact, as I've already heard from the brokerage industry and investment industry. So these are things we're watching for. We don't predict the market. What we do is we adapt to the market. So we're flexible from that perspective. I hope that sort of gives the picture.
Perfect. Thank you so much. And Chi, again, thank you for your time and sharing this information with our investors and our followers. And stay safe, stay healthy.
Likewise.
Yes.
Thank you so much. Take care, Jessica.
Take care. And just to let everyone know, if you found this information helpful, we're going to be sharing more upside insights in the upcoming future. As well, if you'd like something a little bit more of a deeper dive, we have our Upside Avenue educational webinar series each month. So watch out on Facebook, Twitter, or LinkedIn, or through your email for registration on that. We have one coming up in a couple weeks here. Thanks again, Chi. Thanks, everyone. Stay safe out there, and we'll talk to you again soon.